In the turbulent landscape of 2023, the beauty industry in China finds itself grappling with a relentless wave of closures. Exclusive data from Kichacha paints that from January to October 2023, a total of 1.59 million cosmetic-related enterprises were revoked or deregistered, marking an 87.05% year-on-year increase. During the same period, there were cumulatively 5.2 million new registrations for cosmetic-related enterprises, with the pace of revocations and deregistrations nearly double that of new registrations. Evidently, 2023 has proven to be an arduous year for both local and international beauty brands in China. Surprisingly, not even the once thriving realm of live streaming e-commerce, previously celebrated by investors, can salvage the current lackluster consumer sentiment. China's foreign beauty sector grapples with closures in 2024, reflecting a broader industry downturn in 2023. Amid the lingering aftermath of the pandemic, the once flourishing landscape of foreign beauty products in China is now grappling with an enduring wave of closures, presenting a stark reflection of the profound economic hardships faced by consumers. The previously abundant spending power, which was a driving force behind the beauty industry's success, has tightened its grip, precipitating a transformative shift. What were once considered everyday indulgences in the form of cosmetics and skincare products have now metamorphosed into unattainable luxuries for many. The beauty industry, whether operating in the realms of online or offline markets, domestically or on the international stage, finds itself navigating the turbulent waters of 2023, marked by a pervasive and comprehensive downturn that transcends geographical boundaries and market segments. In a recent video, a frustrated owner of a beauty store in China shared distressing news about the economic downturn, highlighting the closure of shops in a mall. The man revealed that the entire shopping center is clearing out, with stores gradually emptying. He lamented being unable to move his products, including popular Chinese skincare items like OSM for $19, Solasu for $29, Weatherm for $19, and a set of Mifubeo for $29 with free shipping, all discounted to $9.99 each. Expressing his anger, the man exclaimed, "Give us some substantial support for e-commerce, let them thrive. What will the future hold for physical stores?" Yesterday, I saw online news stating that physical stores are facing a dire situation. Finding a good location for a physical store, investing hundreds of thousands or even millions, may result in losses within 6 months. So, don't think this year is tough for physical stores. The real turbulence will be in the next 3 years. He predicted a wave of closures, affecting various businesses, including snack shops, fruit and vegetable vendors, clothing and cosmetic stores, and even large supermarkets. By 2024, he anticipated that 90% of these stores would shut down. He urged people not to be surprised, pointing out the dwindling number of people on the streets compared to a decade ago, despite the significantly higher rent costs. Moving to the second phase, he anticipated a sharp drop in rent prices after reaching a certain threshold. In many places, this phenomenon has already occurred, leading to an awkward situation where most storefronts remain unrented, even with reduced prices. The rent must align with foot traffic, posing a challenge for physical store operators who struggle to find a comprehensive solution, ultimately resulting in closures. A man involved in online live streaming for physical stores shared his experience, emphasizing the harsh reality of businesses desperately seeking transfers, rentals, and vacant spaces. He described the closure wave in November 2023 as brutal and heart-wrenching. As the year 2023 is described as one of the worst economically in the past decade, the outlook for 2024 appears even bleaker. Both traditional businesses and online commerce are grappling with the harsh winter of reduced consumer spending. Even beauty enthusiasts are opting for lower-cost alternatives, raising concerns about the vibrancy of society. The unraveling of foreign giants and the perilous journey of China beauty's local brands. Towards the end of 2023, news about the withdrawal of foreign investments from China dealt a significant blow to hopes of economic recovery. On December 28, a renowned U.S. makeup brand, Benefit, announced the imminent closure of its official flagship stores on various e-commerce platforms, with services available until January 28, 2024. By December 30, Benefit's flagship store on Douyin had emptied its shelves. Benefit, an early entrant into the Chinese market in 2007, had expanded to 275 stores nationwide by the end of 2020. However, in 2021, the brand began a large-scale withdrawal from several Chinese cities. The official explanation cited adjustments to the business model due to changes in sales environments and trends. Reports from mainland media indicated that Benefit briefly entered Tmall in 2011 but closed within half a year. In 2017, it returned to Tmall and subsequently joined JD.com and Douyin in 2021 and 2022. Now, Benefit has decided to conclude its self-operated online channels. In the makeup industry, Benefit, known as an eyebrow makeup expert, has several popular products in China, such as eyebrow pencils, dandelion blush, piggy oil control balm, professional primer, and more. Industry observers propose that the diminishing market share of Benefit in China may stem from a discrepancy between the brand's youthful image and its relatively high-end pricing. This issue underscores a broader concern in the beauty industry, where young consumers, despite their limited financial means, aspire to afford trendy and high-quality cosmetics. The widening gap between the affordability of such products and the economic constraints faced by the youth has become a poignant reflection of the economic challenges within the country. Even household names like Maybelline New York, known for their affordability, are not immune to the wave of closures. As a subsidiary of the L'Oréal Group, Maybelline began a gradual shutdown of its nationwide physical stores in 2022, choosing to maintain a presence within beauty conglomerates like Watsons. Examining incomplete statistics, approximately 17 Maybelline counters in the Beijing area are grappling with closures, with 2 already standing vacant. Employees from 3 Maybelline counters in Xi'an, Fengtai, and Daxing districts have confirmed the reception of closure notices, although the exact shutdown dates remain uncertain. The data paints a stark picture of Maybelline's retraction in China, dwindling from over 5,000 sales points in 130 cities between 2000 and 2011 to a mere 80 stores as of March 31, 2022. This closure trend extends far beyond Maybelline, affecting almost all foreign cosmetic companies operating in China. Particularly noteworthy is the significant closure trend that has swept through Korean cosmetics brands. In March 2021, Etude House permanently closed all its offline stores in the Chinese market. In 2022, Innisfree initiated its retreat, with an exit rate from the Chinese market exceeding 80%. The combined impact of geopolitical restrictions and the pandemic has cast a shadow over the days of Korean cosmetics in China. By October 2023, Amora Pacific Group, the parent company of numerous Korean beauty brands, reported a 5.7% year-on-year decline in third-quarter sales, totaling 5.2 billion Chinese yuan. In November, Su, M37, a seasoned Korean skincare brand in China for 7 years, also faced insurmountable challenges. Moreover, since summer 2022, brands including Too Faced, owned by the Estee Lauder companies, Huda Beauty and South Korean skincare brand The Face Shop have left China's $7.4 billion beauty and skincare market. While Too Faced and Huda Beauty shut down their shops on Alibaba's Tmall Global, the latter closed all of its 38 physical stores. Then earlier in 2023, the global famous beauty brand Huda Beauty officially closed its overseas flagship store on Chinese e-commerce platform Tmall. At that time, the customer service personnel of the store said that this was their only official channel in China. And according to incomplete statistics from CHAILEEDO, since 2020, there have been at least 20 international brands that have closed their overseas flagship stores on Tmall. Among them, at least 5 big international beauty brands have closed their cross-border e-commerce channels and bid farewell to the Chinese market. While the exit of foreign brands may be influenced by geopolitical factors, the rapid retreat of Chinese beauty brands serves as a poignant reflection of the deteriorating economic environment. China's National Bureau of Statistics reported a 19.3% year-on-year drop in the sales of cosmetics in December 2022, with the total sales for the entire year plummeting by 4.5%, marking the first negative growth since 2017. In 2022, a staggering 746,000 cosmetic-related businesses in China were either deregistered or revoked. Numerous well-known beauty brands faced closure or downsizing. 13 beauty brands explicitly declared their closure or withdrawal from the Chinese market in the same year. Among the officially delisted beauty brands, more than half were domestic, with survival periods ranging from 1 to 5 years. Renowned domestic cosmetic brands like Crocs, founded by beauty influencer Dong Zichu, officially ceased operations in May, while domestic skincare brands Xi'an and Rain Edit halted operations in August. The recent years have witnessed a barrage of setbacks in live streaming, with web celebrities and anchors facing scrutiny for various transgressions, from peddling counterfeit goods to engaging in tasteless marketing and ruthless price wars. One prominent incident unfolded in September 2023, when Li Jieqi's live stream triggered discontent among consumers over remarks about a 79 yuan product. This led to a subsequent backlash against the domestic beauty brand Huashitsu, plunging it into months of market perception damage that still lingers. To compound matters, live streams continue to be inundated with a flood of subpar and counterfeit products, further dissuading consumers already grappling with financial constraints. The beauty industry in China is navigating treacherous waters, grappling not only with economic headwinds but also with a crisis of consumer trust. Regarding the withdrawal of overseas beauty brands, industry insiders in China have said that, for international niche beauty brands, they face awkward situations in terms of recognition and cost-effectiveness. At that time, the head of Tmall Global, a cross-border e-commerce platform, stated, "The new format of cross-border e-commerce has become a touchstone for imported niche brands to start businesses in the domestic market." It is reported that as of May this year, there are more than 46,000 global brands on Tmall Global. The platform introduced over 8,000 new brands in the past year and launched over 4 million new global products. However, the CCP's lenient regulations have led to rapid industry development but have also exposed many problems. For example, to this day, many consumers still complain on social and complaint platforms about difficulties with after-sales service and the inability to guarantee product quality when purchasing from overseas flagship stores, and even instances of counterfeit international brands. According to data from the Heimao complaints platform, there have been over 8,700 complaints regarding overseas flagship stores to date. In recent years, although platforms have continuously strengthened regulation, the disorder in the cross-border channel continues due to lenient policies. Consumers still face difficulties in safeguarding their rights when purchasing cosmetics through cross-border e-commerce channels, as well as issues with product quality guarantee. Silent struggles, unmasking the silent struggles and unspoken realities of a nation in turmoil. In the midst of an economic downturn, industries in China are grappling with an uncertain future, each seemingly vying for the title of who is worse off. The aftermath of 3 years of stringent pandemic control measures has left China's economic vibrancy a shadow of its former self. As China steps from 2023 into 2024, despite the optimism harbored by many, the economic trajectory appears to be in gradual decline, influenced by deep-rooted institutional factors. This stark reality, however, is seldom discussed openly due to the stringent control exercised by the Chinese authorities over economic narratives. Any attempt to criticize the economy is met with strict prohibitions, creating an environment where economic experts are hesitant to voice their concerns. Consequently, media articles that candidly address economic difficulties are rare, perpetuating a narrative that may not fully capture the depth of the economic struggles experienced by both businesses and individuals. As the nation faces an economic downturn, the reluctance to acknowledge and discuss these challenges exacerbates the frustration felt by those affected. The juxtaposition of exorbitant prices for beauty products and the financial hardships of the younger generation creates a palpable sense of discontent. The youth, striving to keep pace with beauty trends, find themselves caught in a paradox where their aspirations clash with the economic realities imposed by the current circumstances. In this context, the hushed discourse surrounding economic challenges becomes a manifestation of more significant issues unfolding, a society wrestling with economic difficulties while delicately balancing adherence to the rigid principles dictated by the Chinese Communist Party. The convergence of these factors accentuates the critical need for a candid and nuanced dialogue about the economic hardships confronting businesses, notably within the beauty industry. It underscores the profound impact on the lives of everyday individuals, particularly the younger demographic grappling to reconcile their aspirations with financial constraints. However, these limitations consistently encounter obstacles due to the irrational control exerted by the CCP.